How's everybody doing today? Well, this topic is a really long topic, but this video is not going to be long. It's going to be very short to give you an overview of what it is that I'm discussing. So I want to talk about the difference between different types of expenses for your business. We have cost of goods sold, cost of sales. It's sometimes referred to. Then you have it's sometimes called expenses, sometimes called overhead, sometimes called SG&A. Really, it all means the same. An expense usually is referred to as overhead. It means overhead or sales general administrative cost. So what's all the difference? So basically what we need to do is we need to categorize these costs to the business in two different categories. Cost of goods sold, I'm going to refer to it as cost of goods sold or COGS. That's a typical accounting term. Expenses. Our expenses are called overhead. So we've got COGS, cost of goods sold, and we have overhead. What's the difference? Well, they all cost something for the business, but cost of goods sold, those costs will increase as your sales increase. That's a key point. And the difference between your sales and your COGS is your gross profit. Now, maybe you think your profit is gross, but let's understand gross profit is the difference between sales and COGS, your cost of goods sold. That is the remaining money that we have after we've paid off everything we have, cost related to the sale, cost of the materials, cost of fuel, cost of labor, direct labor related to selling whatever it is we're selling, whether it's a service or product. And the difference between those two is gross profit. Now, out of gross profit, we pay overhead, and anything remaining is our net income before income taxes. Okay, so that's cost of goods sold. We talked about cost of goods sold. So that will generally increase. It will increase with increased sales, and it will decrease with decreased sales. Now, overhead is sometimes referred to as fixed cost. It's generally fixed. It's not entirely true that it's fixed, but it's generally stable. It'll be constant on an ongoing basis. So what's in overhead? Cost of utilities, cost of office labor, cost of owners' salaries, cost of payroll taxes related to the office, and office supplies, anything related to running the business. And generally, the best way to understand where to categorize those in your accounting system, whether you're using QuickBooks, whether you're using Sage, or whether you're using some other accounting system, you are allowed and you should categorize those so you understand where those belong in terms of cost. So really you will understand your gross profit by simply taking the difference between your sales and your cost of goods sold. So in the overhead, the office related costs, again, those will generally stay constant. Yes, they can go up. Power consumption will go up in the office perhaps during the winter time frame, but generally if you average it out over the year, it should be consistent on a month-to-month basis. That's about all I wanted to talk about with relation to that. If your expenses are not identified clearly and properly in your accounting system, you should change the categories so your direct costs and those costs that are related to your sales or COGS are clearly identified as cost of goods sold, cost of sales, whatever your accounting system refers to it as. And then for example, in QuickBooks, expenses are really referred to, or what they really mean by expenses is that it's an overhead item. So make sure you have everything categorized properly. I hope you enjoyed this video. If you have any questions or comments, please shoot them below, and feel free to subscribe below as well. Thanks for listening. You have a great day. We'll talk to you soon.